The recent Fed-fueled sell-off has stocks on track to close in the red for the week. And if you're thinking of checking your retirement accounts in a panic, we have some reassuring words for you. Here with more is Yahoo Finance senior columnist Kerry Hannon. So Kerry, what's the silver lining here amidst all of this recent volatility?
Exactly. Good morning, Allie. It's true. I mean, it's easy to feel jittery and kind of not sure what to do at this point. But the fact is, most of us are investing for the long term, and building wealth is all about having that long-term perspective. So, depending on your age, you've got decades to have this all sort of rebalance and organize itself again to go through these ups and downs. And that's what you'll have lots of these during the course of your investing. But the beautiful thing is, if you're investing for your retirement through your employer plan, a 401k or so forth, or an IRA, you're automatically investing. So you're already buying high, you're buying low. This evens out over time. And the other piece to remember, so many people have their retirement investments in target date funds, which is you set a date where you anticipate you'll retire. And as you get closer to that date, the investments move to be more conservative. And in that case, that's automatically readjusting for you right now. It's taking care of this nervousness to make sure you're protected so you'll reach your goals. So I think people forget that they don't need to make any rash moves right now. Take a breath. It's going to be okay. And this is part of investing, is the volatility.
But Kerry, during a sell-off, are there any moves you should make to fine-tune a bit what you're investing in?
Yeah, Ellie, this is the time really to think about your asset allocation. And what that means is you're looking at how you want to divide up your investments between, say, equity, stocks, and bonds and cash types of investments. And so that depends on how many years to retirement, so your age, your risk tolerance of what, what's you're comfortable with, and also your financial goals. So this is a great time to look. Most people, if that allocation has shifted by 7 to 10%, that's probably a time you want to tweak it to get back to where you want to be, where you feel comfortable. I do think that as people get closer towards retirement, if you're near retirement or at retirement right now, this is probably a good time to really take a little more off the table and put it into cash and sort of high-end bonds in order to have living expenses that you can tap into for the next 2-3 years, what have you, so you're not worried about the constant fluctuation in the market. But again, it's one sort of guide that we often tell people is you want 110 minus your age for the percentage to have in equities. So if you're trying to figure out, well, what would be a good balance for me, that might be some way to look. So I think that's a really important thing. So it's a good time right now or in the next couple of weeks. If you have a financial advisor you're working with, this could be a great time to sit down and say, okay, let's look at my asset allocation. How should I rebalance so that I'm back where I need to be to achieve my goals down the road? And really, I actually like meeting with you should do this annually no matter what. But I personally love having a great advisor on my team, because if you do get those sort of jitters when we have a week like this week, you can pick up the phone and they'll say, take a breath, you're okay. We've got a plan.
Take a breath. I love it. Some great tips there. Kerry Hannon, thank you so much.